Hello, folks. It's Tuesday, September 10th. It's about 2:30 in the afternoon on the west coast of the United States. In this video, we'll be looking at Dolly Varden Silver. It's a primary silver miner and a junior miner, albeit the market cap on Dolly is almost 300 million at this point. And that's my threshold where I like to stop thinking of a company as being a junior miner, and I'd like to see what's next. Are they moving towards production where we start talking about them being an emerging producer? Are they moving towards a buyout? Uncertain at this point where Dolly is exactly, but let me share my screen and we'll get going here. So in this slide, these are notes from a recorded interview with the company's CEO. And so he's just sharing some highlights of the company, tightly held. So Dolly has about 300 million shares outstanding at this point. Only 25 million of those shares are available in the public float. The shares that you and I can invest in if we choose to. And full disclosure, I do hold shares of Dolly Varden, don't have any intention of selling them. But, standard disclosures or disclaimers, excuse me, I can do whatever I want with my shares and I don't have to tell you. I can buy shares, I can sell shares, but that's just legal stuff. I have no intention of selling my Dolly shares. Company is debt-free, 9.5 million on hand. This is a little bit unusual in the junior mining space at this point. Hard to come by. Financing is hard to come by right now. And so having 9.5 million in the bank is unusual currently. This was a point I'd seen before, but I had forgotten about. So one of the things that's happening, climate changes here on planet Earth, the glaciers are receding. At least in this part of the world. It's not a global phenomenon, but in this part of the world, the glaciers are receding, which makes more land accessible for drilling and prospecting. And so he was making the point that the fact that the glaciers are receding in this part of the world expands their potential for prospecting. Low-cost production, if they did move into production or a buyout, a company that bought Dolly, they would have low-cost potential because it's high grades. They're very, very high grades. They talk about kilograms per ton, pounds of silver per ton, where usually silver miners are talking about grams per ton. And so Dolly, it's pounds. So very high grade silver. I found this interesting. So the CEO was pointing out that when he bought the company, he's been on board 4 years now. When he bought the company, it was valued at about 37 cents per ounce in the ground, indicated and inferred ounces in the ground. He paid about 37 cents per ounce. Currently, Dolly's at about $1 an ounce in the ground, and that's their current valuation. So good progress in 4 years. I'd never heard this point before. He was saying that at the height of the bull market, so 2010, silver in the ground was being valued at $3.50 an ounce. And so that was the interviewer, the person asking him the questions, was getting at the idea of what is the company worth? What is Dolly Varden worth today? And this was part of the CEO's response, is that, $3.50 an ounce in the ground based on this prior bull market. And then he also pointed out that due to inflation, $1 in 2010 could buy more than it does today. And so, inflation, he thinks that $3.50 will be higher when we get into another bull market, that this number will be higher at that point. He also pointed out that he and the company's board of directors prefer to be conservative and open in their documentation, their estimates. And so he's saying that they're basing their reserves, indicated and inferred reserves, on a cutoff of 150 grams per ton. He further elaborated that if the silver to gold ratio were to drop from its current value, it's about 90, I think, currently. If that dropped down to a more historic value of 50, and he mentioned that back in this bull market, it got down to about 30, that with a lower SGR, silver to gold ratio, he might cut that threshold number down to 75 grams per ton, cut it in half. And then this is a quote, ounce count goes through the roof. And so their current indicated and inferred resources are conservative based on what the CEO was saying in this interview. I have to do some research. I've never seen anybody talk in these terms. And so I've got to do some research and see, is this really a conservative number? And if so, how conservative is it? But that went on my list of research to do. Let's keep rolling here. Now, these highlights come from me digging into the company's official filings. And so, all of the mining companies, you can go to their websites and they have their investor presentations. You can see the slide deck and lots of pretty pictures and fancy numbers, etc., drill results and, holes poking into the ground. To get the real numbers, to see if they're cooking the books, basically, I go to cedar.com, this website right here. I do a search for documents. And so you can go in and you look for the company. In this case, obviously, it's Dolly. And you start looking at what did they file with. Here in the States, it'd be the SEC, different organizations in Canada. Obviously, Dolly Varden is a Canadian company. But same concept. They have legally required filings, and you can go to cedar.com and look at those filings for yourself, do the deep dive. It's not much fun. It's tedious work. It's time consuming. And do you really want to know how the sausage is made? Because sometimes what you find, footnote this and footnote that. I'm cynical by nature. And so when I start seeing all the footnotes and tables, and it gives me the impression that companies are trying to hide and obfuscate information. And so anyway, I don't dig into the documents a lot, but I did for this presentation, not to pick on Dolly, but because I'm an investor. I'm an investor in Dolly, and I wanted to look. I haven't looked in a while, several years actually. And so I wanted to refresh my deep dive into Dolly. These are some of the notes that I made based on this slide in particular. One of the documents that they file, it's called Management's Discussion and Analysis. Another document is the financial statement. And there's different information in the two documents. And so I start with the Management's Discussion and Analysis. 25,000 meter drill program planned in 2024. They've already completed 22,000 of that as of late June. And of course, in that part of the world, they're in the Golden Triangle. It's starting to get cold. And so drill season is nearing an end. So not surprising that they're near completing their drill program for the year. This year's drill program, they split half and half between the two primary resources, a mix of infill drilling, verify and expand our existing resources, and then 1/3 on exploration targets. So let's go out and look for new targets, and I'll comment on that when we look at a map here in a minute. There was verbiage where they're talking about the series of drill programs, 2021, 22, 23, 24, all leading up to a new updated mineral resource estimate expected to be completed within 2 years. So 2025, 2026, we ought to be seeing a new official resource estimate. They in this document, this was April 26 of 2023, they filed, it's called a base shelf prospectus, and they disclose how many shares that they could, not that they will, or that they intend to, but they specify how many shares that they may issue during the upcoming period. And in this case, 25 months, $50 million, 50 million shares. Of course, Dolly's currently trading at basically it's $1 per share in Canadian dollars. It's about 80 cents in US dollars. But anyway, as part of this filing, they got approval for issuing an additional 50 million shares if they choose to. This is their website. You can go, this is the corporate presentation we'll look at. Fact sheet is kind of a condensed version of the presentation. Other stuff on the website, you talk about their different projects, investors, news, etc. This is the investor presentation slide deck. There's some good slides in here. We won't spend a lot of time. This is the Golden Triangle, shown here in yellow. This is the Golden Triangle in British Columbia, historic mining district. Lots of metal been pulled out of this area of the world. Here's Dolly Varden down here in the light blue. Notice the dark blue is Hecla. And so Dolly is immediately adjacent to or surrounded by Hecla, which obviously makes Hecla a likely buyer of Dolly if Dolly goes that route. If Dolly chooses not to go into production and instead makes themselves attractive as a buyout target. And based on the interview with the CEO, that was the impression that I got, is that he's he even talked about it in those terms, that he's packaging Dolly Varden as an attractive buyout target. That's the map there. Let's keep rolling here. This is Sean. I'm not sure how to pronounce his last name, and I don't want to hash it. So there's the CEO, board of directors, and advisors. Here's the capital structure. Again, tightly held. There's the available float. We can see some of the institutional investors, Fidelity, Sprott, this is Sprott Management, as differentiated from Eric Sprott, the individual, billionaire investor. He invests in lots of mining companies. 10% holder. Hecla has 14% of Dolly. So Hecla already has a significant portion of Dolly ownership and has, I forget if it's one or two, but has at least one board member of Dolly, is a Hecla board member sitting on the board of Dolly. So clearly Hecla is interested in Dolly. Some of the history, Hecla tried to buy Dolly years ago when it was obviously a much cheaper company. It was actually, I believe it was an attempt at a hostile takeover, and it failed, obviously, but Hecla still interested in Dolly. And look at the location. There's Dolly and there's Hecla. Obviously, Hecla is interested in having the resources on the property that Dolly controls. Fury Gold Mines is another junior miner, has a significant portion, 17% of Dolly shares are held by Fury. Fury's market cap is only about $60 million, and $50 million of that market cap is their shares of Dolly. And so some investors, this is a guess on my part, I don't know, but reasonable to assume that some of the investors in Fury are invested in Fury because of Fury's holding of Dolly shares. So fully diluted shares, 310 million. Oh, fully diluted, 325 million. That's interesting. We'll get to a slide in a bit where that'll be interesting. Market cap, 310 million. Cash on hand, that is as of September. So this is later information. The interview with the CEO was February of 2024. And so this is later. Oh, and I know what it is. Eric Sprott recently invested started at 25 million, and I think it went up to 28 million. So I think that Eric Sprott just put $28 million into Dolly, bringing cash on hand to 40 million. So my slides, excuse me, the number that I showed you in the slide is incorrect. based on their presentation. So company timeline, let's skip through a bunch of this. You can go to the website and look, and this is typical of mining company presentations. They show you drill results, all their fancy modeling. One of the things that is of interest in this particular company's case, they speculate that these two deposits could be joined. And so some of their drilling is an attempt to join or determine if these two resources are joined. Here's the current mineral resources, indicated and inferred, and again, silver ounces and then gold ounces. So with Homestake Ridge, they picked up some exposure to gold, and we see that here. Here they're showing us, if you look at the company reserves in gold terms or silver terms. And so, you can convert the gold to silver, and that's what we see here. Convert the silver to gold, that's what we see here. I think that's it for the presentation. Now, this is the warning about, sometimes you don't want to know how the sausage is made. And that's the deep dive into the company's financial statements, their management discussion documents, the documents that they are legally required to file as a public corporation. Sometimes you find information that, gee, I just as soon not have known that. But anyway, let's keep rolling here. Again, cedar.com. You can go, you do this research yourself, Dolly Varden, if I could type Dolly Varden, hit search and time range, and you'll get the documents that are relevant to the company and the time range. Now, some of the information that I looked for specifically in my deep dive, I wanted to see, when we talk about shares outstanding, how has that grown over the years? And this is an example of, they don't come right out and tell you this information, because it's, it's not something that companies don't really want you to know this. So 2018, we 50 million shares outstanding. Today, this is year end of 2023, we were at 257. If we go back to their latest presentation, they were showing 325 million fully diluted shares. Quite a growth in the number of shares outstanding. And this is not, I'm not picking on Dolly here at all. This is typical of mining companies. If you dig into the details of any of the mining companies, this is the kind of thing you're going to find. And in particular with the exploration and emerging producer companies, because, think about it. They don't have any money coming into the company. The only way they can raise money to fund their ongoing operations, their drill programs, getting analysis of those drill programs, doing exploration, prospecting, all of that costs money. And the way they fund it is by selling shares of stock in the company. And so, that's what we're seeing here. When you invest in a mining company and the price just kind of sits there, and it's frustrating as an investor, why isn't my investment doing anything? Well, this is part of the answer. The company is diluting the value of the company by selling shares. If they weren't selling shares, it would be reasonable to assume, as they increased their resources, that the value of each share would increase. But at the same time, they're increasing reserves. They're also diluting the number of shares outstanding. And so that's what I'm showing in that slide. I was just spitballing, if we look at going forward, where might we be at the end of 2024? How many shares is there potentially outstanding? If we look at this prior slide, so the lowest percent of increase in each of these years was 19.6. That was the least percentage increase. And so that's here. If we start with year end 2023, We increase it by 19.6, we end up here. Well, they're already at 320 million outstanding, so clearly that number's low, albeit this number does not include their 16 million options. And so if we add the 16 million in there, we get to the 323 actually. So maybe this number is reasonable. The 307 plus the 16 gives us 323. We're currently in that ballpark. The high expansion increase in shares, that was back in 2022 at 64%. There's another year where it was 51. Hopefully we don't see that kind of dilution going forward. If we did, we could be at 422 million shares by the end of 2024. I don't expect to see that at all. I'd be shocked if we did see that. But again, I'm just spitballing here. In this estimate or this projection, I was starting with the number in 2024, the legal filing. They were at 284 million shares, and then they had the approval to issue as many as 50 million shares over the next 25 months, which means in any given quarter, that's 12 million shares. So if we add the 12 million to that, we get 296. We're already above that at 320. So clearly that's a low number. But anyway, here I was just kind of spitballing, where might we get with share count by the end of 2024? What have we got next? Cash burn rate. And so this was kind of the thought occurred to me as I was digging into the dilution rate. Well, part of the dilution rate, and it's what I was saying a minute ago, they have to fund their ongoing operation costs. And when we look into, this is from the management discussion and analysis again, if we look at a 4-quarter period and step back in time, we can find what's their burn rate over a 4-quarter period, over any given year, well, any given 4-quarter period, what is the burn rate? And so in the latest 12-month period, their burn rate's 27 million. And so reasonable to expect that going forward, 2025, or the next 4 quarters, we're going to see at least $27 million, Canadian dollars, spent by Dolly, which means they're going to sell another 27 million shares of stock. Now, we balance that against, they've got cash in the bank right now, and so maybe they don't sell that many shares. But if they didn't have money in the bank to cover that burn rate, they'd have to sell 27 million shares. And keep in mind, right now, Dolly's share is about $1. And so we could think of one share, $1, that's 27 million shares. And I went back and I'm walking back in the documents 4-quarter periods. And so this is backing up one quarter. We can see that, the burn rate is steadily increasing. Back in from 22, 23, it was just under 20 million and it's grown. Hopefully that trend doesn't increase. And, we can talk about a couple of factors that could be contributing or likely are contributing to this increasing burn rate. Well, one of them that we'll see in an upcoming slide, increasing salaries. And so they are, as the company grows, they're increasing the salaries and the number of shares being awarded to the company principals and the board of directors, increasing awards, compensation for the people involved with the company as the company grows. That makes some sense. Energy costs rising. Inflation is affecting all costs. And so, clearly we're seeing inflation feeding into this growth in their burn rate. Again, hopefully that this trend doesn't continue, albeit, inflation is not slowing down. And so reasonable to expect that actually the burn rate will continue to increase going forward. Let's see, we already looked at that. What do we got here? Oh, and so this is one of the factors that I was just referring to. If we look at compensation rates, so compensation of the company principals, And I'm not knocking Dolly. Again, I'm not doing a hit piece on Dolly. But again, I wanted to give an example of digging into, the corporate documents. If you choose to do this for the companies that you're invested in, this is how you might go about it, some of the things that you might choose to look at. And again, as an investor, I'm invested in Dolly, and so I wanted to do a deep dive for my own edification. In this table, and again, this is from Management Discussion and Analysis reports. These are legally required filings. And this is an example of a table with footnotes. So see the 1, 2, 3. We've got footnotes. And if we look at, here are the footnotes from that table. So a corporation controlled by, this is the president and the CEO, corporation controlled by Robert McLeod, technical advisor, director, company owned by the CFO. And so I was about to say double dipping. It's not that they're double dipping, but you certainly might get that impression by looking at these documents. And again, this may be the kind of information that you just don't want to know. You don't want to know how the sausage is made. And as a cynic, my cynical perspective on the world, these are the kind of things that make me think that a company is intentionally trying to obfuscate matters. But that's just my take on the world. So, and what do I know? I'm just good old boy from Texas. So if we take these numbers and add them up. So for example, if we look at the CEO and the company that he's the owner of, he gets compensated. Dolly Varden compensates the CEO in two different ways. One, as the CEO, he doesn't take a salary, he takes shares of stock. I'm not showing this here. You can dig in. Well, it's in this table. We can look here. So here he is being compensated as the CEO, share-based payments. And so in 2023, he got almost 375,000 shares of stock. 2022, it was that many shares. And then his corporation, S2K Capital, management fees. And so that is cash. And so as his company, Dolly paid $690K. As an individual, Dolly gave him that many shares of stock. And so the combination of those two in year ending 2023, that was just over $1 million. That's good pay. It's a good job if you can get it. So, and then you can see there's the numbers for the other. These are the three, the people that have footnotes in the table. I chose to dig into those footnotes and then add up the two different types of compensation. In the top table here, this is just for the first quarter of 2024. In the bottom, these are year-end numbers. So we can see here that the CEO, he went from 850K in 22 to just over $1 million in 23. Based on his compensation in the first quarter of 2024, he's on track for $1.6 million. And I alluded to that earlier in this presentation that it appears, based on my research for this presentation, that as the company grows, they are increasing the compensation for the company principals. So, and what you think about that, that's for you to decide. Looking at this compensation information, again, that explains some of why we're seeing this trend higher in the burn rate on Dolly Varden. And so that's the end of my presentation. And again, I want to make it clear that I'm not picking on Dolly. I'm invested in Dolly. I have no intention of selling my shares of Dolly Varden. Let's look at, it's here. Let's just take a quick look at the capital structure. So, clearly, I'm just a good old boy from Texas. But, these people, you would hope they know what they're doing when they invest in a mining company, in a junior mining company, Fidelity, Sprott, Hecla, Eric Sprott, Eric Sprott's no dummy. He's a billionaire. And so clearly Dolly is a company worthy of our investment money. But if you dig into the corporate documents, if you go and look at how the sausage is made, you might come away with a colored perspective. I guess that's how I'll put it. And that's where I'm going to wrap up, folks. Let me stop sharing my screen, and I look forward to talking to you in the next video. See you.